All right, so the Fed, not sure what happened there, but the Fed, honestly, we just never really know where we stand in crypto, do we? Regulators in the US especially just can't make their mind up, and it feels like the ground is constantly shifting beneath our feet. So, just a few days ago, the Fed was seemingly changing the rules on crypto lending. Now it seems to be discouraging TradeFi from getting involved in crypto. Who knows what policymakers are going to be telling us next week? Thank goodness November's midterms are going to sort everything out. Anyway, we're going to take a look at that for you in this episode, get a little bit of insight into what regulators are thinking from one expert. Markets, meanwhile, well, Fed minutes are out, so no prizes for guessing about their jitters over that. And Genesis living up to its name by changing its leaders and culling a fifth of its workforce. Just another day.
Join thousands of NFT traders who already start their day on CryptoSlam.
So what on earth are America's decision makers thinking? Well, for those of us living in crypto, trying to figure that one out, well, it's left us feeling a little bit dizzy, hasn't it? So far this week, the Fed has issued guidelines on how to access its master accounts. That opened a pathway for crypto banks to tap into the central banking system, but then it sent a letter telling traditional banks to check for legal issues on crypto activities. So a bit of a mixed signal there. Meanwhile, the Federal Deposit Insurance Corporation, the FDIC, has apparently been trying to deter banks from doing any business with crypto firms. So 2 steps forward, 1 step back, a few to this side, up, down, left, right, A and start. This is what makes my head spin. I'm sure it does yours as well. Does it all mean, though, that regulators are at least starting to take some action in the US in particular, even if it does look a little bit messy? And is that actually a good thing, for instance? Well, Angelina Kwan, CEO of Stratford Finance, told Forkast that regulators around the world are making moves and are trying to get to grips with crypto.
What is happening globally is it is true that they are starting to accept, or at least not accept, but at least state that digital assets are a rising asset class. And because of it, both central banks around the world who have forays together in terms of all the central banks work together, all of the securities firms work together. Because of that, I think this is now what was used to be in the hallways is now being discussed in main discussion areas. And I think because of that, certain rules and regulations are actually being consulted on. This is the first real asset class that's been developed since stock and futures, if you really think about it. There are special areas that regulators are grappling with right now of how best to regulate this, and how do they take the differences in digital assets versus securities versus futures and versus other products. I mean, that is the area where regulators need to be very careful, as well as study it. And I think that's what they've been doing all this time and working on that. I don't think the US is behind. It is developing. I think all the countries now are developing. And the market always moves faster, and it will always be the case that regulators are always developing and catching up sometimes, but nevertheless, this has really developed very quickly as an asset class, and the adoption has been very, very quick. And I think the resources of the governments as well as regulators around the world have been strained because of it.
Well, you can hear more from Angelina about all of this and more at next week's Crypto Rising live stream event hosted by Forkast. Some of crypto's most influential figures will be talking with Forkast Editor-in-Chief Angie Lau and Sean Lee from the Crypto Council for Innovation. It's live at 9 p.m. Eastern, August the 25th, 9 a.m. Hong Kong time, August the 26th. Sign up at Forkast.News and don't miss out. Now, over on the markets, most of the top 10 cryptocurrencies by market cap fell overnight. Bitcoin and Ethereum both down around 2%. As of 8 a.m. Hong Kong time, US equities, meanwhile, falling yesterday after the Fed's July minutes seem to indicate that interest rates are set to continue rising. XRP, the only crypto, meanwhile, to buck the trend, Ripple gaining 0.7% after the token's issuer was named among the 5,000 fastest growing private US companies. To dive deeper into today's market conditions, we are joined by Bybit's Igneous Turenis. Always a pleasure to chat with him. Let's start with general market reaction, Igneous. Broadly speaking, it looks like things moving in line with equities in response to these Fed minutes. Is this surprising at all?
Nowadays, we are in almost kind of a vibeflation, like whether or not we're going to get an inflation or not an inflation, it's basically based on kind of what everyone's vibe is. Because like as Feds, you can't really control supply because, you know, the supply chain problems caused by the pandemic lockdowns, as well as geopolitical tensions in multiple places in the world. There's not a lot that they can do, but what they can do is through kind of like removal of liquidity and the kind of like management of the Fed's balance sheet, that they're able to nudge on the demand side to kind of like help hopefully to achieve a soft landing. If you take a long-term view, like not even that long, just like 20-year long-term from 2002 to now, you look at the Fed's balance sheet. It's basically like a one-way when we ride to the top, and then all the tapering that they have done in the past month, it's barely registering a blip.
And in terms of the tail end of all of this, at what point do you think markets are going to have priced everything into? Are we looking ahead to the spring, for instance, and how are we considering all these risks from interest rates in particular?
I don't think kind of like it's something that, you know, even with the crystal ball, you're able to kind of project a definitive timeline. But in order to kind of like project many months into the future, like there's too much variables, and then there's like human element of like the entire vibe of how everyone's perceiving the economy is going. So you know, it's not something that can be projected into that long term.
All right, well, talk to us about Dogecoin. We always love to chat about memes. Your thoughts on what's going on there?
Two teams, basically both came out of Meta, formerly known as Facebook's DM, or even older name Libra's project. And then, you know, you have Sui, you have the Aptos, both attracted 9-figure venture capital fund. And I think Aptos just released their white paper last week. But, you know, it hasn't really captured too much attention outside of the usual kind of like crypto VC and those people who are hyper sensitive to those news. Whereas Doge, you know, sometimes having the word Doge in your name is more powerful an instrument to, you know, capture the public imagination than have a 9-figure VC cash injection. So Shiba Inu has been talking about a layer 2 for the longest time, but Doge kind of like stole the thunder under them. And you know, it's just kind of like Dogecoin community has this kind of irreverent but just like really happy you know, to revert to the word again vibe. And then meme, like even though like we feel like it's a joke, it's actually such a great tool of just kind of capture people's imagination and propagate your message. You know, when they're able to kind of like just command such large amount of mind share on a moment's notice with the power of meme, all you need to do is a couple cute dog photos and a bunch of people vibing to it elatedly and ecstatically.
All right, thanks. As always, Igneous Turenis of Bybit talking to us there. Now, elsewhere in crypto news, crypto brokerage Genesis has reshuffled its leadership team. It's slashing 20% of its staff, though. CEO Michael Morrow is stepping down. COO Darar Islam is taking over on an interim basis. Morrow is apparently going to stay on to advise the company through the transition. Genesis, of course, a wholly owned subsidiary of Digital Currency Group, which was very hard hit by the Three Arrows Capital insolvency. According to the Wall Street Journal, Genesis provided 50% of the collateral for 3AC's $2.4 billion loan, and a court report once published on 3AC's liquidation site showed that DCG still has a claim on 3AC of up to $1.2 billion. Bitcoin miners are struggling too. Stronghold digital mining stock plunged more than 25% in US trading Wednesday. That was after the Nasdaq-listed mining firm posted losses that had widened in Q2 from a year earlier, despite a restructuring plan. Stronghold says it's reached agreements to return Bitcoin mining rigs to try and reduce its $67.5 million of debt. The company is aiming to slash its outstanding dues by about 55% of its total outstanding as part of this restructuring plan. Otherwise, that's it from us for this episode. Like and subscribe to this video for more content like it. There's plenty more. You want to watch it, I promise. Let us know as well your thoughts on what's happening and what we're doing and what we can do to improve. Put those down in the comments below.